Afternoon, everyone. Good afternoon, everyone. Gabe Velazquez here with you, transparenttradesolutions.com on a Friday, 6 October. Hope everybody's having a great trading week. A couple things. I have a class coming up on Thursday about correlations, very strong. In fact, I'm going to talk about that today with you when we go over the charts. Sign up for the newsletter. I have a couple things brewing that I think maybe exciting for everybody. Again, just want to start putting out some more information, some free information. I know, trading is, again, very interesting that today's, right, we got a strong blockbuster jobs number, market initially sold off. It's really interesting how the mood this morning, I just find it fascinating, right? The mood this morning was dire. Everybody was shorting. Everybody's talking about the downtrends and blah, blah, blah. And then what happened, we had the big reversal and by the end of the day, it was like everybody kind of changed their tune. So really interesting how the mood swings right now with the market. But as I just actually got done with the session with my members talking about remaining dispassionate, just focus on the process, stay disciplined, and don't get caught up in all the noise and all the dysfunction and delusion that goes out in the trading. Everybody, showing you only their winning trades and all that nonsense. So, it's a tough business, man. So, but what makes it tough is, again, all of that stuff I keep talking about. So if you're struggling out there, join me in the class. You want some mentoring, I'd be glad to work with you. And, ultimately what you have to determine is whether this is for you or not. I have to tell you, I mean, I've had so many discussions over the last 6 months and how many people have blown out of this business. You have to decide if this is for you. Again, as I always like to say, save yourself a lot of time, a lot of grief, a lot of money, and go do something else, because this is not anybody tells you this is easy. Tell them to go stick it. Anyways, I felt like a rant this afternoon. So in any event, all right, everybody, let's go ahead and get into the charts. Let's get into the charts. Now, the first chart I want to show you is the chart of the S&P, and the point I want to make here with the chart of the S&P is simply that if you, again, take a step back and look at the S&P, basically we are in a range, right? I talk about this quite a bit here. Why are we in a range? Because we failed to break the lows. We essentially, by the way, we cannot move forward. This market, it wouldn't shock me in the least if we come in next week and this thing falls right off again, right? Why? We haven't even been able to break 4,500, 4,400, right? So until we break 4,400 on the S&P, this could, we've had so many like this rally there. Everybody got all excited, so on and so forth. So I would still be very, I would still treat this as a range. You could probably short it up here. You want to buy it somewhere down in here. That's obviously was a nice little buy area down in here. And also nothing other than the only positive I would say is the NASDAQ, right? So the NASDAQ did break out of this range. This has also been in a range. So everybody tells you otherwise. Look, clearly, you had the low, you had the high. It's a range, and now we've broken out of the range. In fact, we have some really nice distribution levels to come up here to short against, right? And we have some levels to go long against down in here. No more, no less. We're still in a range. In fact, you could even look at this monthly chart, weekly chart, and make a case for this right there. That could, right? We haven't really had any major breakdowns right there. So you can make a case that we're sitting here, right? So we'll see how, obviously next week we've got CPI, we got earnings coming up. But the fact that, I'll still make that statement. I think you heard me the other day. As long as mega caps don't break, and you saw Apple rallying almost 10 points off the low now. It's got resistance, by the way, at 180. So check that out. But as long as Nvidia doesn't break 400, Apple what is it, like 160 or so, whatever. You get the idea. As long as these mega caps don't break down, remember they're 35% of the index, so of the S&P. So you can't have a major breakdown in stocks in the averages unless those stocks break down. So keep that in mind as well. And you have to, every morning when I come into the session, I talk about what's beneath the surface. Why do you pay attention to those stocks? What constitutes averages is these stocks, right? Averages are made up of stocks. If you don't follow the stocks inside the averages as a way to get a sense of where the averages are, then you're not having an edge, and you're probably losing a bunch of money. So you got to get an edge. You got to understand how this market actually works. Okay. All right. So then you got the Dow. Also, obviously, Dow is lagging. Russell lagging big time as well. So nothing going on. Not really a whole lot to talk about on the interest rates. I know everybody got a little overly excited because we had a backup in rates a little bit, but we haven't even broken this low right there. So for all intents and purposes, rates really, this again, if we can't break down rates, if rates can't come down, and rates pop up again tomorrow, next week, you're going to probably be looking at another down day or whatever. So until we actually get a break in that, and also in the dollar, by the way, the dollar also still kind of just churning here. So all in all, you can make a case that we're kind of just consolidating here. I have a level up here on the dollar. I think we probably get up there on the 10-year. I still, you have a weekly level that I've been focused on down here. So that weekly level is probably, we could get a shot at that weekly level down in here. Okay. Other than that, other currencies, again, nothing really happening there. Metals, interestingly, coiling up. So we've got, gold. This looks interesting. Silver, try to break out. Gold still just, consolidating here. Copper did manage a little bit of an up move here. And then platinum also looked like it popped a little bit here. So this could be something else, but we'll see. Oil now consolidating this massive, drop. And remember, we talked about, I wrote about it last weekend about the sentiment, and that looked like a blow off top here. Rates kind of are in that scenario, but notice what happened here. The difference between rates and a blow off is that right there started failing. So we're kind of in that early stage in possibly the yields, but we still haven't seen the confirmation. Like here, clearly, I was mentioning to my members, if this is going to be a real top in oil, we break down this little consolidation, and sure enough, that's actually what gave you the. But that was your first signal there. So we're kind of in that dollar. And by the way, if that's the case, then obviously stocks will continue to rally into year end. Remember, October is bear killer, right? Usually come in a little bit weak into October and then make major lows. If you go back in history, check it out. Nat gas, I mentioned last Tuesday, possible breakout out of 3. Indeed, it did after the inventory numbers. And this is the first time in about 6 months that we've actually broken 3. We are actually coming now into some supply around 3, but these are not great levels. I think this thing goes to 4, possibly. So, we're looking to get long some pullbacks. You're going to buy Boyle calls and so forth. Everything else really just grain's not really doing anything. Interesting, corn could be poised for a breakout, but hadn't happened yet. So all in all, again, a nice recovery today because rates back down, other than the NASDAQ breaking out, but heading back up to distribution supply. Under the surface, there's a bunch of stuff going on. I think I talked about utilities on Tuesday. Utilities, XLU, using that as a proxy for the bond market. We did, in fact, TTS, we did buy calls. Now here's the XLU is the utility ETF, right? This is all the utilities, Con Ed, NextEra, Southern, so on and so forth. You guys know SoCal Edison and so forth. But I wanted to go a little bit more aggressive. So we actually bought NextEra. We bought NextEra this morning when it hit 47.32, right? So that is our entry. We bought calls on this right as it touched 47.32. So far so good. We'll see if that pans out. We've got a much more aggressive target, but yeah, that is something that we did. We actually haven't done a whole lot this week, as it's as been very, very choppy. But this was something, and then I'm looking at a bunch of other stuff. So I think there's a lot of stuff setting up for next week. We got CPI on Thursday. We got earnings starting Friday. We got the banks, JPM, Citi. So now we're really going to get into the meat of the earnings season for the latter part of the next week. That's really exciting for me because we do a lot of our options plays on earnings. So that's going to really present some opportunities. So if you have any questions on that, also, again, just quick reminder, there's a link below if you want to join me for the class. That's Thursday, 4 p.m. Pacific. Go ahead and sign up. That is a free class, and I'll go over some more stuff there. The corollaries are really, really strong. So we'll be talking about that for about an hour or so. If you are interested, join us for that. Okay. If not, have a great weekend, and we'll see you on Tuesday. Take care.